Hi there, good morning. You've tuned into ET now, and this is the Diwali special edition of Buy Now Sell Now. I'm Cheryl D'Souza. Today with me, I have Snehi Shah. And Snehi Shah, we should introduce the show to all of our guests.
Absolutely.
And it is not Buy Now Sell Now today. It is Deal or No Deal, where you will have stock picks that will be put under the lens. And today we will bring you the insights and the expertise of the top analysts to break down the stocks on your radar, from fundamental indicators to technical indicators to fundamental trends. Our experts will deep dive to give you a real picture. Is it a deal worth seizing or a no deal best left aside? So let's get started onto the journey to make smarter and more informed investing decisions. But before that, Snehi, we will have to take a look at the markets, because as we speak, the markets are near the day's highest point, isn't it?
Absolutely, it's looking rather good for the markets right now. And if you take a look at the Nifty, it's recovered. Very sharp recovery coming in 1% higher. 24,400 is where we've managed to cross for now, Cheryl. We have to be careful in a market like this. Not much we can, build our hopes on, because we have seen volatility over the last couple of weeks as well. But it's the festive week.
Absolutely.
Let's hope everything works out well for the Nifty, and the recovery that we are expecting to see on the street. Let's hope that continues.
Exactly. I hope we see the recovery on the streets, and the markets right now are pointing at a very healthy recovery. If you look at Nifty Bank, that one is outperforming the benchmark in the season. Today's trading session, 1.3% after coming in for Nifty Bank. Advanced decline ratio is a very pretty picture when you look at the advanced decline ratio today, because it is very much tilted in the favor of gainers, and it's been a while we've actually seen such a stark advanced decline ratio. Let's talk about the list of gainers. You have Shriram Finance reacting to earnings, 7.5% uptick coming in for Shriram Finance. Adani Enterprises, ICICI Bank, JSW Steel, M&M are the other set of gainers. While on the flip side, you have Coal India, you have Axis Bank, Hero MotoCorp, as well as Tech Mahindra that are losing. Bajaj Autos is actually seeing a little somber mood in trade today. Talking about the sectoral indices, then PSU Bank Index lead the gains, with metal as well as you have the broader markets holding on to gains right now. And none of the sectors are in the negative territory. So definitely we've kick-started the festive week with a good footing, and hopefully we are able to build on to those gains in the rest of the week. But like I said, today we have a brand new show, a special Diwali special edition of Buy Now Sell Now, which is Deal or No Deal. And we have our experts joining us on the show. We have Kunal Bothra, who's joining us on the technicals, while on the fundamentals we have Gaurang Shah. A very good morning to both of you gentlemen, and thank you so much for joining us on the show. And we will have to kick start with the queries that we've had, and whether it's a deal or no deal. Just a quick brief to both of our experts. We will pose the queries to you from our from our viewers, and you need to tell them, is it a deal or a no deal, based on the technicals and based on the fundamentals. So let me kick start with the first one. Gaurang, let me come to you with the first query. This one is coming from Subrata, who's writing to us from Kolkata. He wants to know whether he should go ahead and buy GSK Pharma. According to you, based on the fundamentals, is it a deal or a no deal when you talk about GSK Pharma?
Well, first of all, Cheryl, let me wish all the viewers of ET Now, you, your entire team, my good friend Kunal Bothra, and everyone, happy festivities and happy Dhanteras, Diwali, and a prosperous New Year. And pray to Lord Almighty that all of your health stays good and you all prosper as far as your investments are concerned. Now coming to Glaxo Pharma. Well, this is a niche company, an MNC pharma company which has got power brands. It has also got a great dividend payout history. Low on volumes as far as the turnover is concerned on the exchanges, and the holding of the promoter is close to about 75%. It is a strong company in terms of its presence. There are on and off news flow, Cheryl, of some of the MNC pharma companies or other sectorial MNC companies where the foreign promoter wants to delist, and you see some action. I'm not saying that there is that kind of a news flow. I'm just making a point over here. And the momentum on the stock is totally dependent upon the news flow. There is no large investor who is attracted towards this particular. So I'm not saying it's a bad company, it's a great company. But in terms of preference, if I have to compare likewise amongst the listed pharma companies, then we have a buy coverage on names like Sun Pharma and Cipla from a long-term point of view.
All right, so that is the take coming in on pharma, especially GSK Pharma, and I believe it's a preference coming for Cipla is what you're saying. Cipla and Sun Pharma are two picks for you, Gaurang?
An alternative investment idea. Since we don't have coverage on GSK, I can't comment on it. But if you're looking at in that space, and if you're willing to go in for a separate name having same kind of business, then Sun Pharma and Cipla would be the preferred ones.
So alternative investment ideas coming in on Sun Pharma and Cipla. Gaurang, this is Snehi also joining in, and festive greetings to you as well. But let's get a more comprehensive understanding on whether GSK Pharma could be a deal or a no deal. We've had the fundamental take also coming in. Let's go across to Kunal now, who's standing by with what the stock is looking like on the charts and what according to him could fare well for the stock if at all, and if this is a deal or a no deal. Kunal, take it away.
First of all, very, very happy Diwali to all of you, as well as, Gaurang and all the viewers of ET Now. Now, on the charts for, Glaxo Pharma, GSK, what's very interesting is what I looked at it on the longer term chart. So these are the, the monthly charts for the stock on the longer term basis. And there's this interesting behavior which I think you have to note, because you are looking at this as a long-term investment, is that whenever the stock gets back into an overbought territory on the indicators, so this is the RSI for Glaxo Pharma on the longer-term charts, and whenever the indicators get back into an overbought territory, all you see is that the stock goes through a prolonged bit of a pause over here. So as you can see, for months and quarters to come by, the stock gets back into a trading range. We saw the behavior, very similar kind of behavior when the indicator gets into an overbought territory, the stock gets in for a pause. Of course, the uptrend continues for the stock on the longer term basis, but then what matters over here is the patience level which gets tested into the stock. We saw the third incident, and interestingly, we've seen the fourth incident coming for the stock this time around, where you've seen the stock making a high closer to 3,000 odd levels. And then for the last 2 quarters, we've seen the stock taking a bit of a pause, which means if the same price behavior gets replicated, what matters over here is that the stock could get back into a very, a strong trading consolidation. So for you, I think what matters over here is buy on dips as a strategy. And of course, if you're a long-term investor, then continue to hold on as well as accumulate.
All right, buy on dips is the strategy coming in for GSK Pharma. And just in one word, deal or no deal, Kunal?
Yeah, of course it's a deal, but as I said that the strategy matters over here. So buying on dips could be a good strategy, but definitely a deal.
All right, definitely a deal. Buying on dips is a strategy that one should adopt when you talk about GSK Pharma. Let us take the next viewer query then, and this one is coming from Srinivas. He's writing to us from Hyderabad. He's saying that he's just retired from service. He wants to invest around 2 to 4 lakh rupees for a period of 3 years. He wants to buy quality stock for double-digit CAGR returns. Gaurang, let me come to you. Given the fact that gentleman has just retired from service, which means that he could be a senior citizen, he has a time horizon of 3 years, wants to invest a lump sum about 2 to 4 lakh rupees. I'm unsure if he wants to invest all of that into one stock at one go, or if it's multiple quality names. In this market, in this scenario, which are the stocks that you think stand out the best and one where he can go and seal the deal with?
Before I answer that question, Cheryl, I think it is prudent on my part to give a word of advice to Mr. Srinivasan. As you rightly mentioned, he's retired, so possibly he's nearing his senior citizen age limit. And one has to be absolutely clear in mind that when you're investing in stock market, you need to be prepared for higher degree of risk appetite, because investing into stock market is exposed to all kind of risk. But at the same time, if you invest from a long-term point of view in strong fundamental companies, then those companies have given you return. But he's a senior citizen and he's opting to put about 2 to 4 lakh of rupees. So my advice to him is don't put all your eggs in one basket, point number one. Point number two, make sure that you have at least 12, 16, 18, 24 months plus kind of a time horizon to have a meaningful return from your investments into stock market. But be prepared to withstand the volatility that the stock market is going to throw to you. 3 options I have for him from a long-term point of view. The first one is Tata Power. This is a this is a company from Tata Group, largely into power generation, and now they were diversified into green energy as well as charging stations for EVs. Additional power producing capacity will enhance the earning visibility, and hence my advice would be that first preference would be Tata Power from power generation. The second one would be from the private sector bank, Axis Bank. We've seen the numbers. Some areas were better than what our estimates were. And demand as far as credit loan recovery, credit demand is concerned, is likely to show growth drivers towards loan book growth, and then the NIMs are going to improve. Provisioning coming down, gross net NPA coming down, again an added trigger. And the third one would be a government PSU called Bharat Electronics Limited, BEL. We just saw the numbers over the weekend, Cheryl, and their numbers are pretty good. Strong order book indicating that the outlook for the company in terms of future growth is very, very strong. So these three would be the investment ideas. And my advice to him would be that divide proportionately whatever you want to invest into three equal parts and start investing. Don't put all your money at one time. Start at current levels and on gradual correction, go on adding it.
Okay, so that's the view coming in on stocks that could be good deals for at least a 3-year horizon. It's Tata Power, Axis Bank, BEL that have made it to Gaurang's radar, and hopefully that answers your question. But let's keep it going with all the queries coming in. And the next one, Kunal, I'm going to come to you for this query. We have one coming in from our viewers, Mr. Subramanian from Chennai. He has bought Piramal Pharma at 129 rupees per share. He's asking you to suggest what to do. Should he sell or should he hold on? Is it a deal or no deal at this point?
Well, I strongly believe that it's a deal for the stock because, the stock has exhibited a very classic kind of an uptrend. So when we look at the charts for Piramal Pharma, the stock has gained strength, month after month and quarter after quarter. So this is the longer term charts for Piramal Pharma. Again, a stock which has reached overbought territory in terms of indicators, but then this doesn't result into the stock going into a sharp correction. It just gets into a phase of a pause where the stock remains into a range. So like now, we are seeing a stock getting back into a trading range. It's stuck into this 30-35 point kind of a band on the weekly, monthly charts. But then the uptrend is intact for the stock. Since you've purchased at very low prices, I believe you should continue to hold on. Look at the surge in volumes for the stock also on the medium-term charts, and this also indicates that the trend is intact for Piramal Pharma, and the stock should gain up higher from current levels also. So definitely a deal.
Definitely a deal coming in for Piramal Pharma. Gaurang, what's your view on Piramal Pharma? Have you tracked this one or any other CDMO players that you like right now? Because in pharma, you've definitely said that you like Cipla and Sun Pharma as an alternate choice when we asked you about GSK Pharma.
So I think the CDMO space, that is contract development and manufacturing organizations, or CMOs, contract manufacturing organization, it's a large opportunity for Indian pharmaceutical companies to perform in terms of outsourcing, etc. And while the fact is also has been in place, Cheryl, that India was, is, and will always remain pharmacy to the world. So that gives plenty of opportunities to those pharma companies who are into CDMO or CMOs. Piramal Pharma, I have seen the company, but the regulation restricts me to comment anything on buy, sell and hold because we don't have a coverage on Piramal Pharma. But likewise, are there other companies which you can look at? Then Dr. Reddy's and Zydus Life. Cipla also happens to be a CDMO player, which I mentioned earlier. So Dr. Reddy's and Zydus Life are the two other CDMO and CMO players which you can have possibly look at.
And Gaurang, thanks for that. But we have been hearing quite some buzz being made in the CDMO space. And Cheryl, one market veteran who is really bullish on the CDMO space is none other than Madhusudan Kela. And we've interacted with him. Right. He has been bullish on the entire CDMO space and believes that these could be outliers when it comes to the pharma sector.
In fact, he said that this could be an investment for the next 10 years.
10-year period, exactly. Yes. So it was a surprising take coming in. But as we slip into a short break, let's go across to his interaction and listen into what's fueling this bullishness and what's actually making CDMO a deal for him for the next 10 years.
This is a bottom-up sector. You have to, कितने सारे शेयर निकुंज 4-4 गुना हुए हैं फार्मा में in last 2 years.
ग्लेनमार्क हुआ है, लॉरिस बढ़ा है, शायद वोकार्ड बढ़ा है, जहाँ तक मैं याद कर रहा हूँ.
वोकार्ड बढ़ा है, स्ट्राइड्स बढ़ा है, 4-4 गुना हुए हैं मैं बता रहा हूँ. From अगर कोविड बॉटम से देखोगे तो कई शेयर 5-5 गुना हुए. It's been a very good run.
But सब themes pharma में CDMO, generics.
एक जो बड़ा theme है, which is from a 10-year perspective, it is CDMO.
अच्छा. CDMO क्या होता है?
Yeah. तो निकुंज ये जो पहले क्या है, कोई भी foreign की जो कंपनी होती है, right? जैसे Merck है, Glaxo है, they are actually outsourcing, either contract research or outsourcing some manufacturing to Indian companies. So because of the geopolitical situation between between America and China, a lot of the work which was going to very large Chinese companies and which are multi-billion-dollar companies, which have even better capability, better infrastructure, no doubt. But because of this geopolitical reason, that work is shifting. Now where can it shift? It's not it can shift to Mexico, it's not it can shift to Taiwan. भाई वहाँ पे कैपेबिलिटी नहीं है, राइट? इंडिया में कैपेबिलिटी है, अपने पास इंफ्रास्ट्रक्चर है, टेक्निकल टैलेंट है, तो वो जो शिफ्टिंग है ना निकुंज, वो 2 साल से चालू हुआ है. इट्स नॉट येट विजिबल इन नंबर्स, राइट? बिकॉज ये कोई भी कॉन्ट्रैक्ट आते पहले छोटे से चालू होते हैं, और वहाँ पे भी ऐसा नहीं कि चाइना में अगर उन्होंने बंद कर दिया तो कल अब्रप्टली जाके जो एग्जिस्टिंग कॉन्ट्रैक्ट को है उसको बंद कर देंगे. तो वहाँ से धीरे 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 करके डिक्लाइन हो रहा है, और यहाँ पे वो जो बड़े बड़े नए नए कस्टमर है ना, वो आ रहे हैं अभी. ये विजिबल दिखेगा आपको मे बी 2-3 साल के अंदर.
कैन CDMO भी 5 times in 10 years?
पॉसिबल है,
हो सकता है.
सेलेक्ट कंपनीज में श्योरली भी.
उदाहरण के तौर पर हम स्टॉक डिस्कस नहीं कर रहे हैं, डीवीज है, डीवी CDMO के बिजनेस में,
दे आर लीडर्स.
लॉरस CDMO के बिजनेस
They are leaders.
और कौन सी कंपनी जो CDMO में, हम उदाहरण के लिए बात कर रहे हैं.
नहीं, अभी इसका वन सोर्स जो नई कंपनी है स्टाइल्स वाली की जो बनी है, जो लिस्ट होने वाली है, दैट इज अ प्योर CDMO प्लेयर. पिरामल इज अ प्योर CDMO.
CDMO कैन बी 5 times in 10 years.
पॉसिबल है,
ये एक बड़ा अपॉर्चुनिटी.
पॉसिबल है, बहुत. और ये कैसा अनफोल्ड होएगा ना, ये अभी धीरे 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 अपने को समझेगा. बट आई एम वेरी बुलिश.
Welcome back. You're watching Deal or No Deal, our Diwali special show on ET Now. Before we keep the conversation going with our guests today, Kunal as well as Gaurang, on which stocks could be a steal deal this Diwali season. Kunal, I want to ask you about everything that we've been seeing with gold. You know, gold prices, there seems to be no stopping for them. Also, Dhanteras is tomorrow. At a time like this, would you recommend players that are involved with the metal, the likes of jewelry companies or anything that has to do with the metal, would you recommend investment in these stocks as a participant to the metal, or would you recommend investing in the metal itself?
So I definitely believe that I think investing in the metal itself is a better strategy, because what's actually happened is that many of the stocks which are for example, the likes of Titan and the gold finance companies like Manappuram Finance, etc., they have their own share of concerns which have emerged very, very starkly over the last 3 months, 6 months or so. And that's why I would believe that the stock price reaction for these stocks have been all over the place as compared to gold prices as an asset class, which has been a lot more consistent. And look at this from the dollar denominated prices. I think we were almost at 2000 levels or 1850 levels in terms of dollar prices, and we are almost at $2,700 per per ounce for the gold prices. We are almost at 78,000, 79,000, about to hit 80,000 on the M6 prices for gold. So I think the trend for the gold prices on the longer term chart still looks attractive. And the best part so far is that the prices for gold and the indicators on the charts are not yet into a deep overbought territory, which could probably signal that we could be looking at a major top for the gold prices on the longer term basis. So I think on the back of all of this, I believe investing in the asset hard gold, I think, is a much more better strategy.
All right, investing in gold per se would be a better strategy when you compare it to the gold or jewelry players, is the take coming in from Kunal. It's the technical view coming in on this one. But Gaurang, I'll take the next viewer query that we have. We have Neha from Bangalore who's written to us saying that she wants an expert take on the likes of Cochin Shipyard or Garden Reach or Motilal Defence ETF for the matter of fact, since there's been a lot of correction in this space. She wants to know, can she look to buy right now with a short-term view? What's your take coming in on the defence space? And I will get your long-term view. And based on fundamentals, what's your take? Given the fact that we saw a spectacular rally in the PSU sector as a whole, be it railway, be it power, be it defence, but the pain has been felt by most when you look at the way how the defence players or defence players have actually corrected from their peak, especially if for shipbuilding companies, shipbuilders, they are the one that have actually seen a sharper hit when you compare it to the other players. So what's your take? How should you look at the space afresh? Where should she bet?
So, Cheryl, give me 32 seconds to a minute to answer this particular question because it needs a little bit of clarification. So our good friend Neha has decided to invest into a very strong fundamental sound sector, that is defense. And the fact of the matter is, Cheryl, that while answering, I think the first or the second query, we mentioned the three investment ideas: Tata Power, Axis Bank, and BEL. Now, BEL is a government-owned company which is having a huge contribution as far as defense-related focus is concerned, and that's where the order book is very, very strong. So, what I'm trying to say over here is that we are very clear about the sector in terms of the growth opportunity. If you're looking at investing in defense from 3 months, 6 months, 1 year, my humble advice is that please relook at your strategy. The reason being that defense companies, when it comes to manufacturing of defense equipments, whichever it be, whether it is for the Air Force, whether it is for the Navy, whether it is for the Army, whether it is for Border Security Force, or whether it is for Coast Guard, these equipments are very, very precise in terms of technology, and you need dedicated effort to make a precise prototype equipment, which then goes under various tests through Ministry of Defense and other related authorities. After getting an approval, okay, from all the respective authorities, with thus the mass scale production starts. All these things will take not 3 months, 6 months, 1 year, but it will at least take year and a half, two and three. So, I mean, there are three. I'm not compatible to comment on mutual funds, but there are three that came out: HDFC Defense, then was Motilal Oswal, and then I think was Aditya Birla. I will not speak about those funds, but defense as a sector looks very, very promising, giving a very, very great return over the last 1 year, 1.5, 2 year, 50, 100, 102, 300%. The stocks have corrected maybe 30, 40, 50%. I don't know, whatever be it. But if you are investing into defense related themes, please be very clear about your time horizon of 2.5, 3 year plus.
Okay, so that's the take coming in on defense stocks looking promising, but the advice is to increase the time horizon and look at it from a long-term view. Kunal, take us through what the likes of these shipbuilding companies, the likes of Cochin Shipyard, Garden Reach, tell us what they're looking like on the charts, because if I pull up these charts, what's in front of me is year-to-date Cochin Shipyard is exactly doubled. Year-to-date Garden Reach is a good 80% up. Do you think this momentum, this rally is going to sustain on the charts? Do you think both of these and the entire defense sector and particularly shipbuilders, do you think they're a deal or a no deal right now?
Yeah, definitely a case of glass half full or half empty, because when you look at this from their 2022 lows, these stocks have done exceptionally well. So we look at the first chart. Now this one, we look at Cochin Shipyard first, and that will probably give you a very clear picture of how the trends have shaped up for the entire defense stock. So we look at the the previous charts for Cochin Shipyard, and there we have looked at how the stock has given a fantabulous return on the longer term basis, and then gone through a process of a correction, and that would determine that how you need to poise yourself when you look at this from a short term as well as on the longer term charts. So for Cochin Shipyard, we looked at the longer term basis, the stock has done exceptionally well. It's gone up almost 4 to 5x in just the last 1.5 to 2 years. Now interestingly, the stock has gone through a major correction, so it's almost half from that levels closer to 2900, 3000 approximately, to now levels of 1350, 1380 approximately. Now what matters over here is that the major rally which started off for Cochin Shipyard from 2022, the stock is on the verge of coming to a 61.8% retracement. It's a very strong Fibonacci retracement for Cochin Shipyard, and that indicates that the stock has completed a major phase of correction. Now over here, the instances what we've seen historically for stocks, my experience tells me that stocks generally don't bottom exactly at those levels, but they spend some time over there, whether it's 1 month, 3 month, or a couple of quarters, but that becomes a very strong value buying territory for stocks on the longer term basis. So this is exactly the charts for Cochin Shipyard, and 1260 is the level apparently for the stock at the 61.8% retracement, which means we could be at a cusp of maybe another 100-point drop into the stock on the longer term basis, but that would probably be a very good buying point for traders who are at a longer term trajectory. Look at the way the stock has multiplied on the longer term basis charts, and this could be a correction where one should look to enter. So first point is, increase your time horizon. Don't keep it short term oriented, because if you keep it short term oriented, the last selling could probably make you exit your stock, because the volatility could be very high. Second, and the most important part is, look to buy the stock on dips and have a longer term time horizon, because when you look at this, you are almost at the cusp of an end of a major bear cycle as well as a potential start, say over the next couple of quarters, towards the start of a major upcycle which could happen to this name. Then we look at another charts for Garden Reach Shipyard, and very similar kind of a tendency, because when we look at this chart, again a stock which from almost 3000 levels has come down to 1500, so correction of almost 15%. A pattern consistently of lower highs which has been formed for Garden Reach also. So here also, it indicates that the stock is going through a phase where it's completing a pause or completing a phase of correction, and it's going through a phase of a pause. So 1500 to 1800 apparently is a zone where the stock is spending some time. So it's almost taken 2 months for the stock to try and take a pause over here. The moment the stock breaks this major resistance on the upside, which is currently at 1800 mark on closing basis for Garden Reach Shipyard, this could be a big breakout point for the stock on the longer term basis as well as on the short term chart. So this is how you need to position yourself. Don't keep it short term oriented, because there could be a residual correction which could be at play for many of these defense stocks. But on the other side, you should not miss out on this very strong buying opportunity, especially if you're a long term trader.
So it's a consensus view actually coming in from both of our experts. When you talk about the defense plays, be it Gaurang or Kunal, they both are of the view that you cannot take a short-term view when you talk about the defense plays, because they have already corrected massively from the highs, and you cannot have a 6-month or a 1-year time horizon. You need to have much more of a time horizon, because you could rather get trapped in that little bit of correction that may be likely in these defense plays. So yes, if we talk about the defense plays, especially Cochin Shipyard and Garden Reach, it's a consensus deal coming in from both of our experts, Snehi, isn't it?
Yes.
Absolutely. So with that, I think we come to the end of this edition of A Deal or No Deal. A big thank you to you, Kunal, as well as Gaurang, for joining us on the show and also making it much more clearer for our experts on which side of the fence they should lie, whether it's a deal or no deal for the stocks based on technical and fundamental. Also, festive greetings to both of you, and also viewers, see you on the other side with some management interaction. Don't go anywhere.